want evidence that it's possible for companies to change their stripes and turn things around? Just take one look at Pitney Bowes, PBI for you home gamers. Here's a company that used to be the major player in snail mail business, selling mail meters and equipment that helped office send postage. But obviously, that's an old-fashioned business, and paper mail is not exactly growth. Yeah, it doesn't give it to you. So Pitney Bowes had to recreate itself as an outsourced services provider under the umbrella of the U.S. postal industry. And while it's still the #1 supplier of mail meters, it's also transforming itself into a digital communications company, an exciting one, including providing software for e-commerce and having a partnership with eBay that looks like it's working out great. The company's recent results have been very strong. Pitney Bowes reported a solid quarter just last week. Stock has been on a tear, rallying more than 140% over the past year and a half, basically since Marc Lautenbach took over as the new CEO. And even though the dividend was recently cut in half to give the company more flexibility to invest in its business, shore up its balance sheet, stock still yields a solid 2.8%. So let's check in with Marc Lautenbach. He's the president and CEO of Pitney Bowes. Find out more about how his company's doing and where it is headed. Mr. Lautenbach, welcome to Mad Money. Thank you so much. Have a seat.
Glad to be here.
Okay, now, I'm trying to, when you think about a transformation, sometimes you have to start with the most, I'd say, eye-opening one, and you used it in your presentation this year, which is that people wrote off the IBM mainframe where you worked, and look at how well that's done. And that's what Pitney's doing.
Well, it is. If you look at our businesses as we sit here today, we've got some incredibly exciting growth opportunities. We facilitate $1 billion of e-commerce transactions each year. 1.2 billion people use our location intelligence technologies through our relationships with Twitter and Facebook. But in addition to that, we've got this great, perhaps not exciting business, but to me, a really great business around mail meters, which continues to be a very important part of our overall model.
Well, what I'm looking for are stocks that offer growth the old-fashioned way, with expanding margins. And that has been a theme through everything that you've said since you took over the company.
Those were my exact words a week ago. If you look at our first quarter, it was growth the old-fashioned way. We had 3% growth, 9% adjusted EBITDA, and it was exactly our long-term economic model.
So the old company saw off a lot of cash. The new company, the digital business, looks like you could go to 35% of your business and is growing double-digit.
It's actually growing 23% in the most recent quarter. I grew 16% in the previous quarter.
Accelerated revenue growth third to fourth quarter.
Absolutely, which, given our business with eBay, you would think the fourth quarter is kind of the high point, but didn't turn out to be true. But the important point about those markets is in aggregate they represent $25 billion of addressable opportunity for us. So we've got a nice business there, but we're just touching the...
Okay, so I'm on eBay, I'm a seller, someone from Australia wants my product. Right. How do I get it then?
Well, it's simple. You log on to eBay. The software that you use with eBay, our software is under the covers. So the software that actually classifies the asset, that says how much it weighs, can it go to Australia, because lots of different things can't cross borders, how much it costs to get there, what the duties are, and who the right shipper is. That's all our software. It's right underneath the covers, so it's perfectly transparent to you. A simple transaction, so it takes all the friction out of the trade.
Okay, now the mapping business. Why does Pitney Bowes have any edge at all in mapping?
Our mapping business has the edge quite simply because we've got the best algorithms out there.
Best algorithms.
So if you look at the math behind the precision that kind of puts you in a particular latitude or longitude, we've got the best goods. And I say that not because our people tell us that, but because I hear it from our clients over and over again, where we're in competitive bake-offs against a lot of names you would know, and we win on a consistent basis.
Why do I want your tracking software when if I go to FedEx or UPS, they have all the greatest tracking stuff in the world?
Those are great companies, but they track their stuff. We track everyone's stuff. So all of the shippers we track. So that's the advantage, because those are great companies. They have certain lanes, but we do it all around the world.
Okay, you've been paying down debt. At a certain point, is it enough is enough, or do you want to pay down debt and then make some acquisitions with a stock that has now gone up a lot?
Yeah. Well, I think if you step back and look at our capital allocation strategy over the last 12 or 15 months, it's unlocked substantial value.
Right.
So we've paid down a lot of debt. That's given us a strong balance sheet. That's secured our dividend. And has provided us the flexibility to pursue both organic and non-organic types of opportunities to pursue these exciting growth opportunities. So we like where we are.
And in the meantime, people just still have postal meters, don't they?
People still have postage meters, and it's a great business. It throws off lots of cash. We've got very high share, and that business looks to be a good business for as long as I can see.
Well, I'm just rooting for you guys, and you obviously pulled it off. And I know it's still, as you say in the we're still early.
No,
you make that very clear.
We're early. Lots done. Lots more we're going to do.
Excellent. Okay, that's Marc Lautenbach. He's the president and CEO of Pitney Bowes. You know I was excited about this company when we did our analysis of what's strong in the S&P. I tell you, there's a lot more upside here. Stay with Cramer.